wabarakatuh. We're from the Asian Finance Banks. Uh, we will discuss about Takaful in this forum video, which is for other panel. My name is Muhammad Noor Haris. Then our panel, Mr. Farid, Miss Nabila, Miss Atia, and Miss Aisha. We will discuss about Takaful. What is Takaful? Takaful is a system whereby participants contribute regularly to a common fund and intend to jointly guarantee each other. So, talking about Takaful, we have no Takaful have a different type, and we would like to ask Mr. Farid about the type of Takaful.
Type of Takaful. Takaful contracts are offered to cover many things as insurance policies. The system is usually split into two types of coverage. The first one is general Takaful and second one is family Takaful, known as life Takaful. For general Takaful, these are Takaful contracts that cover your property such as your home, business, car, motorbike and other else. These Takaful groups work similarly to conventional insurance while maintaining Sharia compliance. For example, you can enter personal liability Takaful contracts that help you protect from lawsuits, just like personal liability insurance. For family Takaful provides benefits similar to life insurance. Family Takaful plans help protect you and your family from risks such as death or illness. They also help you grow long-term savings. Contribution to family Takaful plans go into two types of accounts. First one is a donation to help cover Takaful group loss, and second one is a personal account where funds are invested in Sharia compliant investment to grow savings. To manage the Takaful contracts and coverage, several models of contracts are used. The first one is wakalah, second one is mudarabah, and third one is hybrid model. For wakalah, this model works by Islamic insurance company or Takaful operator becoming an agent for the Takaful contracts. The agent manage the funds for participants whereby the participants pay the agent a fee for their service. Next, for mudarabah. Mudarabah contracts are a profit-sharing venture between Takaful participants and the contract manager. The Takaful participants provide capital in the form of their premium payments, whereby the manager of the contracts provides expertise and managerial skills to invest the participant money into Sharia-compliant investment. The third one is hybrid model. Model of Takaful combines element of both wakalah and mudarabah. In this model, the Takaful manager receives a set of wakalah fee as well as a portion of any profits from Takaful fund investment.
Thank you, Mr. Farid, for your answer. In protection, there are Takaful and Insurance, and we would like to ask to our panel, Miss Nabila, about the difference between these two of Takaful and Insurance.
The differences between Takaful and Insurance. First, Takaful is based on mutual cooperation or called as tabarruk, while conventional insurance is based on commercial factors only. Second, Takaful is subject to Sharia law and government law, while conventional insurance is based on government law only. Third, Takaful plan holder and shareholders' capital can only be invested in Sharia-compliant investment fund, while conventional insurance, the capital of premium is invested in fund and investment channels that are not necessarily Sharia-compliant. Fourth, Takaful is free from riba, gharar and maisir, while conventional insurance has the elements of interest, gambling and uncertainty. Fifth, in Takaful, risks are shared and distributed among Takaful participants who agree to jointly assume risk, while in conventional insurance, risk is transferred and passed on from individual to conventional insurance providers. Sixth, Takaful is generally fair, while conventional insurance is generally deceiving.
Very good explanation from Miss Nabila about the difference of Takaful and Insurance. As we know, in Mr. Farid's discussion about type of Takaful, we'd like to know what is further explanation about general and Life Takaful from Miss Atia.
So, what is Life Takaful? Life Takaful is a Takaful plan that provides a unique combination of protection of your life and health and savings that not only allow you to fulfill goals and dreams, but also aims to ensure that your loved ones will continue to live their life comfortably without any problems, especially financial problems when you die. Life Takaful is ideal when you need protection for a long time period period of time. The rate of increase in life expectancy in Malaysia has shown that you need to be covered for a long period of time with a guaranteed death benefit that will not diminish and contribution rate which remains throughout the period of coverage. It is a product that very appropriate and relevant for all of us. The product under Life Takaful is Hibah, medical card, education and income replacement for permanent disability. Next is General Takaful. General Takaful focuses on a short-term protection of properties and liabilities against any loss or damage. The General Takaful contract is a short-term policy where participants pay contributions and operators undertake to manage risk. The premiums paid by the participants are credited into the General Takaful Fund, which is then invested, and the profits generated are paid back to the fund. Product under the General Takaful is like car insurance, motorbike Takaful, house Takaful, fire Takaful, and robbery Takaful. Thank you.
Thank you for your explanation, Miss Atia. Also, when discussing about Takaful, most brought up in Takaful is Hibah. So, with that, I would like to ask Mr. Farid about what is Hibah Takaful.
Hibah Takaful is mean that in the event of death of the Takaful policyholder, the distribution of the compensation money from the Takaful insuring company to their heirs or the Takaful holder can be done through Hibah, that is directly. Through Hibah Takaful, the individual can donate his property to anyone, whether family or not, while the individual is still alive. There are several requirements that we must bear in mind as a Hibah giver and also the Hibah recipients. For Hibah giver, there are 3 requirements that we must follow or we must know before we give Hibah to someone else. The first one is the absolute owner of the property to be granted. Second one is has the right to give the Hibah, and the third one is has full authority over the property. Whereby for Hibah recipient requirement, there are also 3 requirements that we must know. The first one is if the recipient is a child or disabled person, a guardian or trustee can be appointed to look after the property received by them. Secondly, the Hibah recipient exists when the Hibah is made. And the last one is the Hibah recipient can control the amounts of benefits bestowed on him. From this topic, I can highlight 3 benefits of Hibah. The first one is absolute recipient. When the owner of the Takaful Hibah policy dies, the individual Hibah recipient who has been designated while the Hibah owner is still alive will receive all its benefits as it is the absolute right of the Hibah recipient. Next, cash is available quickly. Heirs can receive cash quickly. For your information, the compensation money can be obtained by the Hibah recipient within 7 to 30 days only. And the last one is freedom to change the name of the grant recipient or Hibah recipient. Free to change the name of the grant recipient to a person at any time.
Thank you, Mr. Farid, for it. About Hibah Takaful. Return to Ms. Nabila about these Takaful discussions. How at individual levels again their own risk management.
Risk management for individuals is the process of identifying threats to the value of household assets and developing an appropriate strategy for dealing with these risks. There are 4 key steps in the risk management process, which are: first, specify the objective. The objective of individual in risk management is to maximize household welfare through an appropriate balance of risk and safety. As example, the objective can be achieved by deciding how much risk a household is willing to bear for investment in order to achieve its long-run spending goals. Second, identify risks. Households face a significant number of risks, including earnings, premature death, longevity, property, liability, and health risks. Each of the risks is associated with a potential loss of financial or human capital. Third, evaluate risks and select appropriate methods to manage the risk. The existence of a risk exposure does not necessarily require to purchase of an insurance or takaful. The appropriate risk management strategies consider the magnitude of the risk and the range of options available to address that risk. There are 4 strategies in order to address the risk, such as risk avoidance, risk reduction, risk transfer, and risk retention. And the last one is to monitor outcomes and risk exposure and make appropriate adjustment in methods. Once the appropriate risk management method has been selected, risk must be monitored and updated as the household moves through its life cycle. As an individual's goal, personal and financial situation change. These changes will affect risk exposure and optimal risk management strategy. Thus, it is advisable to annually review risk management programs, including all ongoing risk exposure and risk management methods.
Thank you for answering with good explanation, Ms. Nabila. Back to Mr. Adia. Mr. Adia, if there any idea to contribute to Islamic risk management system and takaful industry?
Okay, in line with Sharia requirements and the concept of takaful, risk management practice and management of a takaful operator should be better off than a conventional insurance operator. Protection that is in accordance with Maqasid Sharia needs to be integrated into the Islamic finance activities. Takaful operators need to be proactive in managing their risk as part of good governance and best practice code. Self-regulatory is needed rather than depending on regulatory requirements. As risk is an ongoing process, continuous development of knowledge is required in order to understand and manage the risk effectively. Irrespective of the business model adopted by the takaful operators, mudharabah or wakalah or hybrid, the risk management will be the same since the basis is Sharia. Although it is arguable that the Islamic financial system, including takaful, has significant impact on the economics for the past 3 decades, a small impact is better than nothing. Since we are living under constraints, dual economic systems, it is at least a sign of change to ensure that we are working towards changing the mind of the society in general and Muslim in particular. That's all from me. Thank you.
Very nice idea from Ms. Adia. Lastly, I would like to ask our last panel, Ms. Aisha, about solution or suggestion to these takaful discussions.
For the solution and suggestion part, a basic definition of takaful is a joint guarantee. It is a system of insurance based on Islamic principle. Despite being based on Islamic principles, takaful is not religious product and it is available to everyone, including non-Muslim. Whereas conventional insurance is not allowed in Islam as it does not comply with Sharia or Islamic law, as it contains 3 elements such as ghurur, maisir, and riba. In our opinion, takaful is better than conventional insurance in terms of national economy and also for family. Among the benefits is for yourself and family, such as free from riba or interest. For conventional insurance company aim to the collect premium and benefit for an unearned accounts in order to achieve profit. Meanwhile, the goal of the Takaful by comparison is not achieve cooperation among its participants. And the advantage of Takaful has a strong fund polling capacity. This helps to induce investment, contributing to the country gross domestic product in boosting the nation income.
Thank you, Miss Aisha, about new idea and suggestion to our discussion today. I think that's all for today. I would like to thank all our panel for cooperation to this forum's discussion about the food. That's it. Thank you. Have a nice day.